Are you donating money to a charity, maybe to church, something like that? Do you donate cash? Or should you donate stocks or donate your investments? I've got 3 times when you should, 3 ways that you should, that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. When you're in your career and you're really working hard to save up for retirement and you're funding your 401k and maxing out your Roth, all those sorts of things, hopefully giving and supporting the causes, supporting church, those sorts of things are even a higher priority, and you're donating to church and to causes you care about as well, okay? And when you're doing that, you're going to be donating right out of your, right out of your checking account. And if you itemize, most of us don't. If you itemize, you'll get a deduction. If you don't itemize, that's okay. You're still benefiting the causes that you care about. But if you've been saving up in addition to your 401k, Roth IRA, those sorts of things, into a non-IRA account, an individual account during your career. Maybe you received an inheritance and it's in an individual account. You sold a property and you've got proceeds sitting in an individual account. Or say you're into retirement and you're in retirement and you're still giving. Should you be giving out of your cash and cash flow, your bank account, or should you give out of your investments, out of your stocks? Guys, you need to be working with your certified financial planner who's doing comprehensive financial planning to see what the right approach is. But in many cases, I'm going to give you 3 of them. You may want to, if the circumstances are right, donate your stocks, donate your investments to those causes you care about instead of your cash. Now, just a quick disclaimer. Most of you, and by the large majority of us, are not donating to get a tax benefit. You're not donating to get a tax benefit. Oftentimes, or I guess the way it works is when you donate money, the tax benefit is a portion of what you give. Therefore, if it's just greed, if it's pure greed, keep your money, right? If you're only giving to get a tax benefit, it's better to keep $1,000 in your pocket than to give $1,000 away and receive a tax benefit of $220, right? So it's not about greed. It's about giving, but then being a good steward. Being a good steward means, well, if I can give and get a tax benefit and make it tax efficient, then I have more resources, more flexibility, which would allow me to give more in the future, be more secure in my financial life. It just is a more prudent and responsible strategy to give if there are tax benefits, or take advantage of the tax benefits if there are some that are available. So what options would there be? Now, let's go back to whether you're in your working career or in retirement and you've got dollars that are saved up outside of a retirement account. And so you've got an individual account, a brokerage account, something like that. If you've got investments in there that have risen in value, they've appreciated, and now if you sell, or whenever you sell those investments, there's going to be a gain that you're going to need to report on your tax return. If you are at the same time giving money out of your paycheck, out of your checking account, something like that, a different way of thinking about it, a different way of approaching it, is to give the same value, the same amount that you were going to give out of just cash, give that into the security. So take that highly appreciated stock and donate the stock to the church or to the cause you care about. Most of them have a brokerage account because people make these stock gifts, okay? And let's say, for example, you are going to donate $5,000 to the church this year. Donate $5,000 worth of this appreciated stock instead. When you do that, you still get to claim a $5,000 donation on your taxes. Now, will it benefit you? I don't know. It depends on whether you itemize or not and what your circumstances are. But you still get to write off the full market value of what you donated. And then the church, they don't want the stock. They're not going to invest it. So they sell it immediately. But that capital gain that you would have paid tax on, they're a tax-free entity. They don't pay tax on it. So they sell it and they get the $5,000 in cash for operations and whatever, but they don't have to pay tax on it. And then if you say, but wait a second, I wanted that stock. I like that stock. The reason why I held it is because I think yes, it's appreciated, but I think there's more upside. Well, then you take the cash that you would have given to the church anyway, and you buy the stock back. And just like that, you've got the same amount of stock. The church has the same amount of cash, but the stock that you own has a higher cost basis, meaning you can have future appreciation and have less taxability of it. Okay, makes sense? So whether that strategy works if you're in your working career or in retirement, if you're donating cash to a cause, a 501c3, a nonprofit that you care about, and you have investment dollars that have appreciated because you've invested them in a certain way outside of an IRA, Roth IRA, tax shelter account, consider giving those securities to the church and cause you care about and using your cash to buy the securities back in your account. It allows you to increase your cost basis and avoid tax. Now, second scenario, let's take that a step further. Say that you've got a situation where, well, if I donate that $5,000 worth of stock, it's not going to give me a tax benefit this year. And so is there a way, if I know I'm going to donate $5,000, to this cause for the next 5 years or 10 years or something like that, if I know I'm going to do that because this is a cause that I care about, blah, 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 could I and should I donate all of that now in 1 year so that by donating that much, I now am above the threshold and I can get an itemized deduction, I can claim it on my taxes? Should I do that all in 1 year? And maybe I don't have the cash to do that, but I've got the stock to do that, appreciated stock. Should I do that all in 1 year? But I also don't want to give all of it to them because then they'll say, well, wow, thank you very much. Do we get that next year and the year after and the year after? And that's going to put you in an awkward spot and put the organization you care about into an awkward situation with managing cash flow. Well, the same scenario can apply, but instead of donating directly to the organization, open a donor advised fund and donate the $25,000 or whatever it is of appreciated stock into the donor advised fund. The year that you make that donation to the donor advised fund, that's the year you get to write it off. And because you're doing a larger amount or kind of bunching a bunch of years, a future chunk of years gifts into 1 year, it's going to increase your odds that it's going to help you on your taxes and you'll be able to itemize. So you donate your highly appreciated stock into the donor advised fund, you get the full write-off, and then within the donor advised fund, you can continue to hold that stock if you like it. You can sell it or immediately and reinvest it in something else. Or whenever you do sell it, that gain will be sheltered. It's not going to be taxed because it's within a donor advised fund. And then you can choose to send $5,000 a year or whatever it is out of that donor advised fund to that charity that you care about. So it really solves all of the issues there, opening a donor advised fund, contributing or donating highly appreciated stock or mutual funds into that, gets you the write-off, shelters the tax, avoids the tax on capital gains, and still gets even cash flow to the organization you care about. All right, that's the second strategy, a strategy, where you should give stock or investments instead of cash. And the third is the qualified charitable distribution. Now, this only applies when you're age 70 and a half or older. And I know you might be thinking, well, wait a second, they moved RMD age to 72, so isn't it 72? No, only the IRS can kind of even make this confusing. Still 70 and a half for qualified charitable distribution. So this one isn't investments outside of your retirement accounts. Now, this is squarely investments in your retirement accounts, specifically your IRA. You can't do a qualified charitable distribution from a 401k, 403b, something like that. It's got to be an IRA. But if you're over 70 and a half and you're donating money to church or donating money to the 501c3, something like that, you can do so directly from your IRA, going directly to that church, and it doesn't show up as taxable income to you. Conversely, and this is how many people have it structured, well, I'm taking money from my IRA to help supplement my Social Security. And so I've got income coming in each month, okay? And that's happening because that funds groceries and all that sort of stuff. And yes, every Sunday I donate money to church, or every month I have money direct deposited or directly withdrawn from my checking account to the church and I'm paying it there. So as you draw money out of your IRA, you're going to get a 1099 that's going to land on your tax return. As you give money to the church or to the 501c3, you're going to get a giving statement at the end of the year. But if you don't itemize, if you don't have enough mortgage interest and enough giving and enough other things to tally up and exceed your standard deduction, then you're not going to itemize. You don't get a tax benefit for giving the money to the charity, and you do have to report all the money that you withdrew out of your IRA. That's just how it is, okay? You could instead say, well, instead of donating $200 a week right out of my checking account to the church, why don't I send that money directly from my IRA directly to the church? And then I can reduce how much I'm drawing out of my IRA because I don't need that money coming to me in income and then going to the church. I can just send it directly to church. Therefore, the money that goes directly to church is not taxable income to you. And you don't get to deduct it, but that's okay because it comes out of your IRA tax free to you because it's going directly to the church. Got to be 70 and a half. Qualified charitable distributions got to go directly to that 501c3, but that's out of your IRA. That's another reason why, a compelling reason. I haven't heard of a reason why that wouldn't work, why you wouldn't want to do that, why that wouldn't be a benefit to giving investments as opposed to cash. So what's your giving strategy? Should you be giving cash or should you be giving stock or investments? Depending on your situation, depending on your age, you're going to want to consider the benefit of giving stock or giving investments as opposed to cash. But work with your certified financial planner on that. They're going to help you with your overall tax strategy, your investment strategy, your retirement plan, your cash flow plan, all that sort of stuff. And through that, we'll help you with the giving strategy as well. Work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K. WiseMoneyShow.com. You can find us there as well. Or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.